Hi everyone, this is Brian Neal with Tradetobefree.com. This video I want to show you a great strategy for trading earnings. One that doesn't require risky options, one that is very effective. Okay, it doesn't require you to pick the 1 in 100 stocks that will beat estimates by a wide margin with a raised guidance. You don't have to predict that ahead of time, and very few companies do that, so you don't have to be a sorcerer and figure out which stock will have that kind of earnings beat. Okay, you can wait till after the earnings release and trade the very best earnings beats. And this strategy is also the number one day trading strategy in the market that I have found, especially over the past couple years. And it's pretty popular among other day traders. And I've actually become more specific on the strategy. I only trade certain stocks in certain patterns, long-term and short-term patterns, okay, with certain characteristics in the stock and also the earnings report itself. Okay, so this trade comes up maybe on average 5-10 times per month. Okay, it's plenty of times to make quite a bit of money day trading this strategy right after a big earnings report. So I'm going to show you a good example of that right here. This is Skechers. This is a company that came out with a big earnings beat on the top line and bottom line. Okay, and the stock is trading below its or was trading below its forecasted target price by top analysts. The long-term trend on this wasn't as strong as I'd like to see it, okay, but it wasn't too bad. If you look at a one-year chart, you can see more of a neutral trend here. If you go back further, though, you can see a longer-term uptrend over the past several years. Here it is, weekly chart from the past 3 years. You can see, over the past 3 years, it's more of an uptrend than a downtrend, but more of a neutral trend, but it was breaking out of this key resistance area right here ahead of the bell, and there was some room between here and the next level of resistance up here. That was a good sign, and the fact that it beat earnings and gapped so much higher was also a very good sign as well. Okay, and you also had this really strong pre-market pattern. This is why we trade the stock today. Usually on Fridays is not the best days to trade the strategy, so we normally do it throughout the week. This one wasn't too bad in that it had the very strong pattern pre-market. Now, on these type of trades, what we're trying to do is look for a key technical entry point that usually occurs shortly after the opening bell, but it can happen sometime after that. And what happens is if it hits that technical entry point that we talk about in our course, the stock generally makes a move of anywhere from 3 to 15% higher within a couple days. Okay, and these aren't penny stocks either, where they go up for a few minutes and then go down 10% a minute later. Okay, these are companies that have really strong earnings beats. They have strong growth. In most cases, they have that strong long-term uptrend, and they're crushing estimates and they're gapping much higher pre-market, and that's what we look for. And if they have a very strong pre-market pattern, and if they're opening up not too long after they're breaking out of a flat base pattern or another bullish pattern, those are the ideal setups that we look for. And in this case, we saw Skechers forming this very strong flat base pattern, actually 2 flat base patterns, or 3, on top of each other here, which is a little unusual, but still a very strong chart pattern, very big gap higher on the strong earnings beat. And I believe they had a guidance raise too on this. They had enough pre-market trading activity. I don't want to trade stocks that have just, a few hundred or a few thousand shares trading hands pre-market. I want to see a very strong pattern on a decent amount of volume, before the bell rings, before the market opens. And that's what we saw in this case. What happened was we waited till after the bell rang, okay, which is right here. Okay, we waited for the stock to move above a key point, and it finally did that. Here, started showing that strength that we look for. Okay, that's when we got in. Now, after we get in on a Friday, we generally put a fairly wide stop, anywhere from 2.5 to 3.5%, more towards the 3.5% on this trade. And we're looking for anywhere from 3% to 10% within an hour or two. And on Fridays, usually what I'm looking to do is get out soon after we hit that 3% threshold and we see some kind of weakness. Okay, so what happened was it hit the entry point. It kind of moved sideways for about 5-10 minutes and then started trading higher. And we got out here at around, 32.50 or so on this trade. And this one actually trended higher and it continued to go above 33 later in the day. But on Fridays, you usually don't see that kind of follow through. And with these retail stocks, they're not really They're often not trending higher for 2-3 days like you often see with stocks and industries that are in a long-term uptrend. Say, for instance, right now, the semiconductor stocks, if this was a semiconductor stock and a very strong long-term uptrend and short-term uptrend, and it was breaking out this pre-market pattern, started to make this kind of move, we'd be looking to keep a part of our position for maybe 2-3 days, as long as the stock continues to make higher lows and higher highs. So what you can do in this case, you can put it on a 5-minute chart, and then as the stock continues to trend higher, you can drop a stop below the prior low. So initially you can drop the stop about 2.5-3.5% below the ideal entry point, technical entry point on this. Okay, so it held above there nicely. It did take a while for it to sort of consolidate because there was a resistance level here around 30.32, but it had the gap higher and the powerful trend going into it, along with the really good news to continue this trend. It also had a pretty reasonable valuation versus its prospects for the future. I don't like to see retail stocks break out of this pattern so much, but they can make big moves out of these trading setups on the big earnings beats. But if you trade these, and if you hit the right technical entry point, these are very high percentage trades. Now, I tracked the rates of success for stocks that met all the requirements, all my personal requirements. There's like a list of 9 requirements. I don't have time in this video to go over all of them, but one of them is the gap higher. It needs to be high enough. It needs to have enough pre-market volume to form these patterns, and it needs to be within a certain percentage of the pre-market high when it opens. Okay, those are the few of the requirements. Has to have a low enough float, or at least a low enough float versus number of shares trading hands on average over the past few months. Okay, but if it satisfies all the requirements in our earnings eruptions trading strategy that we have on our site, in the first quarter when we tracked all of these that met the requirements, it was around a 90% win rate of moving at least 3% from the ideal entry point and without hitting the 2.5% stop loss. Okay, so this is the first one we've seen this earnings season that met the requirements, and it was a nice winner. On Fridays, if I see this pattern, if I don't see it on a really strong tech stock, I'm looking to get out on this first push higher, 3 to 5%. If I can make that within an hour, I'm done for the day. I'll just cash it in and move on. If it got off to a really strong start, so if it went 5% or more in the first hour, then I would be looking at maybe keeping it for or part of my position for a day or 2 or 3. And these setups often move in the current market anywhere from 5%, 10%, 15% to 30% or more within 2-3 days. Okay, so this is the number one day trading setup by far that I've found in the market. I've traded dozens of different strategies online, red to green moves, all the breaking of pre-market highs on biotechs, and a ton of different strategies, shorter-term strategies, and this is the best one by far. And like I said, has a very high win rate and often moves 3, 5, 10% or more. It'll average 5% or more per trade and really crush any other trading strategy out there. So you don't have to wait for or you don't have to get in before the earnings beat. You can wait till after the earnings beat with this strategy, and this strategy does very, very well. And like I said, it comes up 5-10 times a month, usually more during earnings season. Obviously less outside of earnings season, because some companies do report outside of earnings season, or they raise their guidance outside of earnings season. So you'll find a few of those outside of that 6-week period, 5-6 week period where most companies report. Okay, so most people like to play straddles, or they try to guess which company they're going to beat ahead of time, and that's really tough to do. We've called quite a few of those in our swing trading service this past year, and we've got a really good track record of doing that. But it's a lot harder to do that than it is to just wait for the best setups after the earnings beat, and looking at this pre-market pattern, the characteristics of the stock, and also the long-term trend, which is very key as well to increase the likelihood of success. This is just one example. This is the first one this quarter. Like I was saying, we're going to have quite a few more of these. Normally I swing trade, and I find that you get a lot more a lot bigger moves when swing trading. It's a lot less time consuming, especially if you have our newsletter. We have all the top growth stocks and companies beating estimates with rising future expectations featured in our newsletter ahead of the breakout. Okay, so that saves you a lot of time there. But generally, swing trading is a lot more profitable than day trading. But technically, this is more of a day trade than a swing trade. Although you can hold it for a few days, it often, if you drag a stop the prior low on this 5-minute chart here, this could continue to make higher lows over the next couple days. Sometimes between like 11 a.m. and 1 p.m., you may want to give it more room because it may take out a prior low briefly and then regain its traction and then go higher from there. So you may want to think about doing that, lowering that stop loss through here, through that time period between 11 a.m. and 1 p.m. Okay, on the first day. These will often trend higher for 2-3 days, and you can just raise that stop over time, and that usually works out very nicely for a big win in a short period of time. Here's another stock I want to show you too. We took 3 day trades this week, and they were all similar patterns, similar setups. This wasn't an earnings trade though. This was a trial result, and they also got priority review from the FDA on their drug candidate. But it's very similar in the sense that we had a very strong pre-market pattern here. And here we've got a double bottom pattern. And what's interesting is that these chart patterns, you can look at these on longer term charts, on weekly charts. They're great. Okay. You can also find them on the short term charts, and you can play those on these short term pre-market charts if you have enough volume. And in this case, we had enough volume again. We had this big gap up. And so we trade this in a very similar fashion as we do our earnings trades. In this case, though, we looked at this entry point in a double bottom pattern where we saw it cross this point right here with a lot of volume that morning. And again, kept the stop loss pretty tight, like a 2.5% stop loss is what we look for on this. If you're used to trading penny stocks, and getting in and getting out right away, you have to have more patience with these. Okay, so oftentimes they'll pull back, they'll regain their traction, and they'll head higher again and then make their big moves. So in this case, we had to wait, maybe half an hour on this trade, and made a real nice 4 or 5% profit for us on this type of trade. But that's a similar pattern that you'll see on these earnings trades, on these monster earnings beats with the raised guidance. You'll see this pattern too. It's called a double bottom pattern, and it's more effective actually within a long-term uptrend than it is as a reversal. And we have other videos on our YouTube channel that explain that in more detail. We actually found the overall market breaking out of that pattern last year before the run-up we've seen since then. It's a very good pattern also within a long-term uptrend. Okay, and in this case, it's even on a shorter time frame after a big spike after hours on positive news. And once it hits that entry point above the center of the pattern here, strong volume, we want to see the very strong volume. That can be another very good trading setup. Although the success rate on this won't be quite as strong as it will be on the earnings trades. Okay, these will have a little more volatility, and they won't always work out as well. Still worth watching, and still, if I see a very strong pattern pre-market, see enough volume, and there's not a strong resistance directly above the entry point on this, I'll be very interested in this as well. The great thing about the earnings trades, though, on the higher price stocks is that the success rate's so high with a tight stop that you can take a very large position size. And that's one of the great advantages of the strategy is that, if you trade a stock under $10, $15, they can turn over very quickly and very sharply. So you really have a tough time taking a very large position size. But if you have this on an earnings trade, whether you have a $5,000 account, $10,000 account, or just a few $1,000s, or whether you have a $100,000 position size, if you have, once you trade for a while and you build your account up and you're using $200,000 position sizes, for instance, which you can get to, and you get that 5-10% move, which is very likely to happen, or at least 3 to 10% move, which is very likely to happen, probably averages 5 or 6% on these big earnings beats. If you make 5% on that, that's $5,000 within a half an hour to an hour. And then if you scale up and you get up to a $200,000 position size or a $500,000 position size, then it's $25,000 within a half an hour to an hour. So It'll scale with your account, unlike penny stocks and unlike other strategies out there. And you can continue to build your account to a larger and larger size and not change your strategy and have a very high percentage, a very high win rate. With this, a lot less stress, and it's a lot more fun to trade using this strategy than just about anything else taught online for a day trade and for an earnings trade. So that's a great way to trade earnings, a great strategy. You can go ahead and start learning that on a simulator. Our earnings eruptions course is on sale right now. It goes over all the details to make your win rate a lot higher. Okay, and that's one of the keys to being successful over time. You want to trade the best and forget the rest when it comes to setups like this. So, but right now in the current market, or the past year or two, this is a really, really high percentage trade, and I think it'll continue to be going forward in a bull market. So, definitely in a bull market, and even in a sideways market, and one that's consolidating, this tends to do very well. All right, well, that's about it, guys. You can check out the other videos on our YouTube channel and also the presentation on this, the earnings eruption strategy on our site. I'll put a link below, and you can start learning that right away and start doing a lot better in your trading around earnings.